Alrighty, what is going on, Discord and YouTube family? And welcome back to the Trader Shop with BT Hobbs and another edition of Top Down Analysis. Today is April 27th, 2025, year of our Lord, and we are back with another Top Down Analysis. I missed last week. It was Easter, so we had a lot of things going on at the house. So I wanted to give myself some time to just deal with, personal stuff and stuff like that, spend some time with the family. There's nothing ever wrong with that, but we are back. I did do a top-down analysis for myself just to kind of, put me on the right path of price action, but I did not release an official video. So excited to get back into here. Should be a pretty volatile week, so let's get right into it without further ado. We will be breaking down the NASDAQ, the S&P 500, the E-mini Dow, and the volatility index. Later, for the Discord members, I'll break down gold as well, and put a separate video out for Discord members only for that. So what do we have here? I mean, we could start with the monthly candle. I mean, I don't really know how to say this without sounding cocky, but I'm just going to say it. Like, I told you that April was going to be bullish, right? Like, I showed you the data couple weeks ago, 2-3 weeks ago. Like I said, April has an 80% chance of being a bullish month, right? So it's going to be, we're way down at 2022 prices. It'd be far-fetched to look for shorts continuation down from these lows, right? So far, that's exactly what we've gotten. We got 3 days and 4 hours left in the month of April. It looks like it's going to do exactly what I thought it would do and finish out bullish. Now, the caveat to that is what I said was I thought that the market would get back on its schedule, meaning usually the market sells off in the month of May, right? And then we start to buy back up around October-ish. Since the pandemic, though, we've kind of been off schedule. So like I'd say the last 5 years, 4 years, we've kind of been off schedule and we've just been buying the dip, right? Now that the dip has been quote unquote bought, I think that the market will be looking to get back on schedule, right? And if that's the case, then I'm looking for the market to finish the month of April bullish, but not break above the previous month's price action, which was March. And you can see with 3 days remaining, it doesn't look like we're going to accomplish that task. If we don't get back above these highs, then I'm anticipating maybe another little rally above this high, right? And then start to push back down to continue the true move, which I still believe, since there's been no fundamental change, I still believe that technically the market may be coming back to 2020 pricing, right? So we'll see what happens. We could go straight to all-time highs, but I'm going to give you my thesis no matter what, and then I'm going to stand by that. And if I'm wrong, I'm wrong. If I'm right, I'm going to come in here and pump my chest, right? So that's just how we do. I'm just kidding. But looking at the monthly in regards to the technicals, right? Technically speaking, we bought the dip, right? Like, there's no question. We bought the dip. We were back at 2023 pricing. You buy this dip, no question. Investors are going to buy the dip. The question is, do we have enough power to push back above the previous month? And the answer so far has been a no, but let's see what the month of May brings us, right? But structurally, what did we accomplish? In this candle, the month of March, we definitely broke through structural lows. We took out this low, right? We took out these lows here where we wicked below them, and now we're buying that back up. What the market would like to do if you're a bull, you want to see the next month open up and get that continuation above March's price, obviously break above all this all of this consolidation, and then make a new high. If you're a bear, however, what you want to see is you want to see the market come back into this previous low here from August, right? All the way back up to the previous high. And you want to see the market come back into what we like to call the golden pocket, right? The golden pocket on the Fibonacci retracement is about, between the 50 or the 61 and 67% mark, right? That's kind of where we wicked above, right? And that's basically where I believe the market could go in regards to the price action, right? We'll see what happens, but I'm looking for more of the monthly Fibonacci or the monthly golden pocket. So the previous month, March, right here, I'm looking for us to rally back into 20,183 through roughly about 20,444, and even as high as 660, right? I have the golden pocket sitting at about that level. And I think once the market comes back up there, it would have met the objective of a lower high, right? It would have trapped enough bulls people that are thinking that the market is going higher, right? I'm not a fan of that belief because I just don't think fundamentally there's anything there, but that's neither here nor there. But that's my thesis. If you're a bear, you don't want to see the market trade above March's price in May. You want to see us stay inside of March's price and then start to come back down and target April's lows, right? If you're a bull, you're looking at these lows from April as a retest of the overall uptrend, right? We had a rally, right? We put in a low, we put in a new high, and now we're coming back down to test that low that brought this high. If you're a bull, you want to see the market continue and take out these all-time highs at 22,606. Ultimately, it doesn't matter which one you're leaning toward as long as you understand on the lower time frames what you're looking for and how price should be delivered. We go into the monthly on the S&P 500, and until we get to the Dow Jones, you're going to see basically the same thing between the NASDAQ and the ES, right? I mean, the NASDAQ and ES. So if we take that same Fibonacci retracement off the month of March, right, low to high, we're looking at that golden pocket, right? I'm going to keep referencing that because that's going to be important. That golden pocket sitting between 61 and 62% on the retracement side. We're looking at about 58.50 through about 58.96, and that takes us to exactly that monthly supply zone that was created by this break of structure here. Now, I told you guys when this happened that those November lows would be important. So what do you think the market's coming back to do? It's coming back up here to retest these November lows. If these sellers that took out November lows would like to defend, they're going to try to defend inside that golden pocket. So I'm anticipating a continued rally, start the week, right? Maybe a gap up or even a gap down, right? To start the week very bullish. I would prefer, personally, a gap up, right? To rally the troops. We got big, huge earnings this week, right? And we got non-farm payrolls. We got so much stuff. So it would make sense to, if you're a bear, you want to see the market gap up and rally up, and then by the end of the week be at its highest point, and then just have a major sell-off. So we'll see what happens. I'm getting a little ahead of myself, but I'm just thinking about things, in real time, right? So, but anyway, the golden pocket between 58.50 and 58.96 is what I would be looking for as a target going into this week on the S&P 500 to the upside. To the downside, I don't expect us to trade back further into this monthly candle. Instead, I expect us to continue to put a lot of pressure. So if we trade down, I really don't want to see us go below 55.35 to the downside, right? I want to see us continue to put that pressure on the bears that have been selling all the way down here before we come back down and basically give them what they were looking for in the first place, right? So on to the next instrument, though, because I think this is where the truth is being told, right? The S&P 500 and the NASDAQ have way more stocks than the Dow Jones, right? i.e., that means, well, what that means, I shouldn't say i.e. because that's an example, but what that means to me is that those two instruments are easily manipulated, right? Because it has a lot of things going on. You can hide a lot of buying, you can hide a lot of selling, right? So you can manipulate that chart. The thing about the Dow Jones, it's the oldest instrument and it's the smallest of the ETFs, meaning it has the least amount of stocks in it. Therefore, right, it's very difficult, in my opinion, for that particular ETF to be manipulated, right? Meaning if the market needs to go up, it's just going to go up. If the market needs to go down, it's just going to go down. That's why I think that the lagging, mixed with the fact that United Health Group had a 22% down day, right? Mixed with that fact, right? I believe that the Dow is trying to tell us the truth. This is what I would anticipate the other two instruments looking like on the monthly. You see how we dip down into these lows? And yeah, we're buying up the monthly candle, but 3 days and 4 hours left, we're nowhere near where we need to be to make a new high above the previous month. That's telling me that the market is very, very weak. The buyers are nowhere near as strong as they need to be in order to convince me that they want to go higher. Therefore, I'd be looking for a retracement on the Dow Jones of about 30, 50, or 61%, puts us back in that golden pocket. Looking for a push back into about 43,133 to 43,440 on the monthly going into the week. Remember, this week is the end of the month and the beginning of the month. So the amount of volatility, if you thought it was high before, it's probably going to be tenfold going into this week, especially with the catalyst that we have coming forward. All right. Let's move on down to the weekly and start to break down the price action on the weekly to support our thesis. If we look over here, the swing high, right? Now this is wrong tool here. Let me go to this arrow here. So let me turn this magnet off. All right. So this swing high right here, this high is validated by the fact that it brought a new low, right? But it's also an intermediate liquidity, right? What we call intermediate liquidity. So the real liquidity or the extreme is here and then here. And then we have intermediate highs and lows, which are here, here, and here, right? And that's just based on the current time frame that we on off the weekly, right? That being said, the first thing that the market needs to do is take out this intermediate liquidity, right? Remember, I just said I wanted to see us trade up to about 43,664 area. Well, guess what? That's exactly what this level is. It's the previous low from January. It's the previous low from November 4th. When we were coming down here, I said we needed to break November 4th's candle to get on the sell side. We got below it. We came back up, retested. We took it out. And now we're coming back up. And you would want to see bears defend this area here, right? Like you want to see the bears hold in this area right here, right? And you'll see when we come down to the 4 hour, I'm going to have levels in this area of interest, right? Because I think this level is going to be super key. I guarantee I'm not going to do this because it's not how I trade, but I guarantee if you were to take out a session volume profile on the weekly, this area right in here is going to be one of the highest volume areas of this entire trend. So it's going to be the same thing moving back up to the upside. And if the bulls want to take it out, or if they want to go back to all-time highs, it's going to start by taking out this level here, right? Let's move back over to the S&P 500. We'll work our way backwards. We look over here on the weekly time frame. You can see that the S&P is much closer to that swing high, right, than that of its counterpart, the Dow Jones, right? However, it still has the exact same amount of room, right, to get back to November 4th, right? We take out this little rectangle, this November 4th low is exactly what I believe that the market is going to be targeting, right? And that level sits at about 58.73. The bears could stop it before it gets there, but I'm just saying that's the draw on liquidity, right? Like that's where the market should be looking to come back to, because that's the previous consolidation. If we're going to put in that lower high, it's going to come from here. A lot of people are going to be looking at this weekly. They're going to be looking at the daily, and they're not going to look at the monthly and recognize the fact that the monthly is just putting in a lower high, right? And if it can't get that continuation going into the month that we historically sell off on, then it could be very, very bad for the bulls in this situation. Moving over to the NASDAQ, again, same situation. We look at the weekly candle. We can see that, again, tech is leading this drive as it always does. Therefore, the NASDAQ is going to be much closer to this swing high than that of its counterpart, the S&P 500. So I'd be looking for the NASDAQ to take out this high, right? Maybe come up a little higher than everybody else, but still respect the fact that November 4th low, which is, you know, back through here somewhere. I think November 4th on the NASDAQ this is October. Why am I skipping November? Oh, there it goes. Okay. Yeah. So the November 4th low is right here on the NASDAQ. So again, it would not surprise me to see us trade back into the November 4th low, or even fail to get back to it at this little conjuncture right here, right? Dropping down to the daily time frame, you'll see that things are becoming a little bit more clear, in my opinion, right? We had consolidation at the lows. We broke above the highs. We put in a higher low, right? We couldn't sell off forever, right? We just couldn't, right? But what is the target? What is the draw on liquidity? Well, the draw on liquidity is simple, right? You can call it supply. You can call it, you know, fair value gap. You can call it whatever you want. This area right here is going to be important, period. It's the same area that's off the weekly, right? And if you drag it all the way straight across, right, November 4th is right there, right? On the daily, this area between 20,570 and, you know, below is going to be important when the bulls come up here to defend, if they even can make it up here, right? I'm not a fan of just following, you know, blindly what I think can happen. I like to look at the technicals, and I like to look at the volatility index to guide me on what's happening on the day, right? On the week, right? So that's the daily for the NASDAQ. Let's move back over to the daily on the S&P 500, right? And again, you can see the same structure, right? I'm going to keep referencing this level because November 4th low is going to be important. It was important for us to break. It's going to be important for us to hold and protect if you're a bear. If you're a bull, you want to see this level taken out. It's just that simple. If you're a bull, just think about the opposite of what I'm saying, because everything that I'm saying is based off the bearish thesis, right? Because we're leaving discount headed back to premium, right? But when we come up to premium, we want to see, as bears, we want to see this react as premium. As a bull, you don't want to see it react. You just want to see it get back above it, hold it as support, and then continue on to all-time highs, which is fine with me. I don't care. I'll be a bull, I'll be a bear, I'll be whatever the market delivers to me. I'm just giving you my thesis that I think the market is going to continue to hold this trend line, right? If you just draw a trend straight down, what we'll do, in my opinion, is we'll flash above it and then fail and then get back up under it, or start a new trend line. Because a lot of swing traders think like a big money trader, right? A lot of swing traders or retail traders, big money was accumulating down here. But a lot of swing retail traders, as soon as they see this break and retest on this trend, they're going to start buying this market and they're going to want to push it. And, you know, right here is a level where they might want to get out, right? Because if they target all-time highs, the market will probably liquidate them coming down here, even if it doesn't come back down to break the low. So my thesis is look out for the level between 58.38 and 59.39 to act as resistance. But first, we got to get above 56.07 to 57.68, which I will further illustrate once we get down to the 4-hour time frame. All right. Move it over to the Dow Jones. Again, the one that I like the best in regards to the structure that it's delivering, because I just feel like it's telling the truth. I don't think the other two are telling the truth. I think they're being highly manipulated. That's just my personal opinion, right? Look at that same area over here on the Dow Jones. Again, not even near the swing high, right? Or the intermediate swing on the daily time frame, which is right here, right? What I would like to see is the market get above these highs at 41,026 and make a trade somewhere into this area at 41.8843 to roughly about 43.14 more. Again, the projections this week are pretty high already, but they can get even higher due to the fact that we have a ton of catalysts coming up this week. All right. So now that I got all of those monthly, weekly, and daily timeframes out of the way, let's drop down to the 4-hour and I'll bring out my levels so you can kind of see the way that I'm looking at price more specifically based off the 4-hour time frame. Obviously, we have our framework, previous day high, daily fib, previous day low, in wogs or in dogs, whatever they are. Then we have our demand zones and supply zones, as well as a volume imbalance up above. If you guys want to know the exact levels of those, please either DM me in the Discord, at me in the comments down below, or join the Discord. Either one of those will work. The Discord is just the one that's going to cost you some money. The rest of them, they're free. So I assume that you would pick the free option. But anyway, how am I looking for price to be delivered? Well, it's quite simple. If I want to see the market go down, I want to see it trade up first, which is what I'm banking on. I'm banking on that Tokyo will gap up, right? And we will continue to rally up, right? If that's the case, right? And I am very much bearish, I would like to see us rally into this supply zone. And from this supply zone, right, I like to see the market drop back down 5.59% to either put in a higher low, right, or start the continuation downtrend. Back down here would be the weekly projection from the 4-hour supply, right? If you don't know how to do the weekly projection, again, DM me in the chat or tap in, right, in either one of these sessions. Whenever I'm in the Discord for these Q&As, tap in and I'll explain it to you. But also there's a video on how to get it, right, inside the Discord. That being said, we're looking for 5.59% at the weekly projection from the 4-hour supply, which brings us back down to 38,570, right? However, another way we could deliver is we could just come right to the top of the range, or the TOR at 40,294, and we could just go up and then come right down, pushing right to 5.69%. I will note that last week, what we did from here is we got down, came down to these bearish levels, which is bullish in my opinion, right? We tapped into all of these bearish levels first, and then you can see we rallied all week. So I could also see us doing something like that, and that would be the gap down to come up, which you'll see in my bullish plan. I'm basically accounting for some of that, but not all of it, right? So to the upside, right? What am I looking for? Well, this level doesn't matter anymore. I was actually looking for this level. I couldn't find it. Let me delete that. To the upside, I would like to see the market trade down to go up. So where's the nearest level that the market could trade down to? Well, we have the previous day low here for framework purposes. We have a potential demand zone that was formed here, but definitely a support or a fair value gap inside of this area. Me personally, I like to see the market trade down, maybe sweep last week's low. So previous day low up from 5.75%, or the weekly projection or ATR on the week. We'd be looking for the market to push into 42,159. Again, referencing that level that we got from the monthly, the weekly, and the daily. Puts us right here, right? 42,159. And from the previous day high, right, we could gap up and then push up into the monthly and weekly fib. I mean, the monthly fib, which is here at 42,752 or 5.68%. This monthly fib should get tested within this month or early in the month of May, right? We have enough catalysts that if we're bullish enough, we should be able to go up there and retest those levels. So that's why I'm definitely referencing this monthly fib on basically every single instrument we have. Those are my levels for the Dow Jones. Let's move over to the S&P 500, break it down on the 4-hour time frame as we bring out our levels for that particular joint. All right, let's get this guy here. Top down analysis. There we go. Okay, for the S&P 500, again, same thesis. We're just in a different location, right, than the Dow Jones, right? So if we look at the S&P 500, what are we looking for? The market would need to trade up to come down. So if the market's going to trade up, what is the next premium area that I believe that the market could trade into? We have weekly settlement here, didn't account for that, but we have 4-hour supply right here. I like this level because this is where the sellers came in back from April 2nd. So if we trade up into the 4-hour supply, right, then I'd be looking for the market to 4-hour supply at 57.11. So 50% of this 4-hour supply. I'd be looking for the market to come down 6.2%, essentially continuing the bull run, right? But giving us a nice healthy pullback that we didn't get Thursday and Friday, right? Like if anybody was trading the markets Thursday and Friday, pullbacks was not really a thing, right? So we tap into 57.11 and we pull all the way back into this end dog, right? Or new day opening gap that was left open from Tuesday, April 22nd. And that would be basically our target for the week, right? If we trade down, right? That level sits at 53.5725. And the weekly fib is right there. Weekly settlement is right there. And there's a new day opening gap there. And I believe this is the new week opening gap as well. I just took it off because they created a new day opening gap. So there's a multitude of reasons for the market to trade back into this area right here. That's why I really like this area. Now, if we can't get all the way into 57.11, I expect a nice little tap, like little kiss on the nose of the 4-hour supply zone at 56.4650. And then I'd be looking for 6.25%, closing this end dog, right? This new day opening gap and pushing us all the way back down to 52.9225, right? And before you say, Hobbs, that's a lot of points. Like you really should look at the math on the ATR before you say that. Like this thing has been moving 6 to 7% on the S&P 500, which is almost triple what we've been used to all of last year. All right. Now to the upside, what do I want to see? I want to see the market trade down first. So a nice little gap down. I apologize, you guys hear my dog barking, but I want to see the market gap down from this level, right? We have a volume imbalance right here. So we could get a push down in Tokyo, and where would be the target? We'd be targeting all of this red ink down here. Weekly fib, weekly settlement, end dog, right? Weekly data low, right? All of this down here would be the target back to the downside. And if we do that and we're down here by Monday or Tuesday, then I'm extremely bullish, right? Like that is extremely bullish. Every time I see that, it's go time, right? So if we get that, that's exactly what I'm going to be looking to do. Trade the shorts until we get to about here. Once we get here, then I'm switching to bullish and I'm looking for targets all the way back up from the weekly fib, 6.24% at 56.9825, right? If we can't even get down that low because we're too bullish up here at the close of the range on Friday, I'd be looking for just a push down into like the daily fib or the bottom of the range, right? Or BOR is what I like to call the bottom of the range at 55.40. We get a retest off 55.40. We rally up 6.37%, pushing up above the monthly fib, unlike the Dow Jones, but getting above it and then making a push into 58.92. That should sound familiar because it's the exact same level that I just talked about on the monthly, the daily, and the weekly time frame. Okay, so 6.37% back to the upside is what we're looking for on the S&P 500. Moving over to the most popular instrument, the NASDAQ, right? This is the one that I'll be trading this week. Primarily, this and gold is going to be what I'll be looking to trade. But I'm not one of those people that are like, I only trade one instrument. That's just not what I do, right? So wherever I see a setup and wherever I feel most comfortable is where I'll set my home at right there. But I'm liking the NASDAQ right now, so I'm trading that right now. All right. So what are we looking for? Again, the same thesis. If the market wants to go down, it needs to trade up first. Well, what do we have right here? We have a 90-minute resistance, right? if we go down to the 90-minute, you'll see that this level is really clean. This is why I marked it, right? So if we look, it's the same level that I marked out on the S&P 500, 90-minute resistance from April 2nd, right? That's what created these sellers jump, they dropped down and they gapped the market down all the way into discount before, we found too many buyers up there, right? So that level is the level that I'm going to be looking to see what the market wants to do inside of that level. That's the first level that I'm looking for the market to trade down from. If we trade down from that level, I'm looking for about 7.77%. Weekly projection puts us back inside of, I thought I got rid of this INWOG, but back inside of the INWOG, the INDOG, right, which is still left open, right, and then puts us at a data low of 18,313.75, and that's specifically from the 90-minute resistance at 19,855, right? Going back up, if we trade up further, right, we gap up, right, by Monday or Tuesday, it would probably take us a little bit to get up here. But by Monday or Tuesday, we're sitting up at the supply zone. After gapping up, I'm going to be extremely bearish, right? I'm just going to tell you right now, I'm going to be extremely bearish. I'm going to be screaming it from the rooftops. I'm looking for shorts. I'm looking for shorts. I'm looking for shorts. I'm looking for shorts, right? Because this area is going to be daily supply. And this is what started the entire sell-off after. This was the second leg, right? After we broke November 4th, right? If you go back in time in this video, you'll notice that I keep referencing the exact same level. This is the 20,528 level that I called out from the monthly, the weekly, and the daily. If we come up here, I am not looking to long the market. I'm looking to short the market, right? And if it happens on a Wednesday, I'm going to be shorting this market from like the open of Tokyo. I can tell you that right now, right? So I'd be looking to short the market. I'd be targeting 7.59% at 18,753.75, because that will be basically the top and where I think we'll start selling from to continue the selling into May, June, July, and so on and so forth. All right, to the upside, if I'm a bull, I want to see the market trade down first, right? Now, from where we are, I don't expect the market will trade down too much, right? If it's going to go higher. So I'll be looking for the bottom of the range, which is at 19,468, right? 19,468, this little green box down here. I'll be looking for a target of 7.92%, back to the upside of 21,010.25, right? If we can't get there, then what I would be looking for is a weekly projection coming all the way down, closing the gap off the INDOG. Like this INDOG is going to be super key because, again, just like the other instruments, the INDOG sits on top of the INWOG, which sits right smack dead in the middle of this move, right? If you were to take a fib from here to here, the 50%, you could just see it. It's probably here or here, right? Like this level is going to be important if we come back down here. So if we trade down to here to start the week, I'm going to be like, oh, it's probably in the bull's hands. It's going to be the same thesis as if we traded up and got here. If we trade down and get here, I'm not looking for shorts. I'm looking for longs. I'm going to scream it to the rooftop. Same thesis, right? So what am I looking for? From that level, I'm looking for about 8.3%. That puts us right back to, you guessed it, the monthly fib, which is the levels that I've been screaming from weekly to monthly to daily. So right now we're in a perfect situation for this plan to kind of come together as we roll into the next month. And again, we're going to go over those catalysts that could really push this market one way or the other. So let's jump right into that, right? And we go into Fed Forex first, right? Now, there is a ton of things going on this week, right? So I will say this, I say it in every single video. If you are not comfortable in this market, my strongest suggestion to you is size down, right? It is no, like, you should not feel bad about sizing down to be comfortable in the market. The market is moving at warp speed compared to what it was moving 2 months ago, right? We are in very unprecedented territory. We are literally trading history right now. So like, this is going to be in the history books. So don't you want to be a part of the history books as a person that made money and stayed alive versus the person that traded history and just blew his account every day, right? So just think about it like that. April 28th, which is tomorrow on a Monday, excuse me, we start the week with basically nothing, right? In regards to USD, that usually means that we'll probably set the tone in Asia where we're trying to go. So expect Asia to be explosive tonight, right? Going into Tuesday, right? What do we have? JOLTS report. Job openings has been a big deal in this market. The market's looking for the unemployment and all of that good stuff to kind of cool off, to kind of get signs where the Fed can kind of start to cut rates, but it hasn't shown up as of yet. So that's the first red folder news. And we also have consumer confidence going into that on Tuesday. Then it gets a little choppy on Wednesday. We got ADP, non-farm payrolls. I call this like the calm before the storm, because this is like the private sector, right? Like it's not the non-farm that you're looking for, but it's the private sector, which is telling you, hey, this is what, the big sector the public sector could be looking forward to, right? We got GDP. I'm sorry, we got advanced GDP quarter over quarter, employment cost index, right? Blah, blah, blah. But the big one is right here. Core PCE is coming out at 10 o'clock. That's going to be a big deal because, again, the market is looking for any reason to rally the troops so that they can, basically start pricing in the Fed dropping interest rates. I too want the Fed to drop interest rate. I just don't think it's going to happen. This is my personal opinion. All right. Then we roll into Thursday. As you know, we got every single Thursday unemployment claims at 8:30. We got manufacturing PMI and all that good stuff. Now, this seems like nothing. You're like, Hobbs, like this ain't a lot of stuff until I show you the second leg of this. So we go into May 2nd on Friday. We got non-farm payrolls. Like that's going to be an explosive day. Maybe if they don't do all of the movement like they did last week, Monday through Thursday, then Friday could be like a nothing burger, but we'll see what happens. But yeah, we end the week with non-farm payrolls, and then that should be explosive. You're like, Hobbs, I still don't see, like this is nothing. Okay, cool. So let's go to the next tab, which is Earnings Whisperer, right? If you guys follow Earnings Whisperer on Twitter, if you don't, you definitely should, because he does my entire job for me. 30%, I believe 44% of the S&P 500 is reporting this week. 44% of the S&P 500 is reporting this week. That means that over 200 companies are reporting this week, okay? And these are just the highlights, right? But these are the ones you really want to pay attention to, okay? On Monday, nothing crazy, nice simple day. You got waste management, blah, blah. Nobody really cares about Monday. Let's be for real, okay? Before they open on Tuesday, the Dow Jones is going to get a boost because UPS is reporting, and you best believe it's going to move the Dow Jones, guaranteed, okay? And then after the close, Visa is reporting. That's going to move the Dow. It's going to move the S&P 500, not so much on the NASDAQ. But then you got PPG, which is, whatever. Let's get to the nitty gritty, what you guys really want to see. Caterpillar is reporting. Again, if you trade the Dow Jones, I'm telling you right now, this will move the Dow Jones. So if you see a spike on Wednesday in the pre-market, you were warned, right? I'm gonna point to the top-down analysis and be like, you should have watched the top-down analysis. Tuesday and Wednesday pre-market, if you're trading the Dow Jones and you get a spike, it's gonna be because of UPS and Caterpillar. I'm telling you right now. All right. And then after the close, we got the big dogs. We got Microsoft, Meta, Robinhood, Qualcomm, like definitely gonna move the market. Okay. And then Thursday, remember I said Thursday is like a little light on news? Okay, but it's not really, because after the close, we got Amazon and Apple. These two could literally change the direction of the market by themselves. Hint, hint, right? And guess what? Thursday will definitely be the new month, right? So when these two report, I think that that's going to be either the sentiment shift or the continuation of the sentiment bullish. These two right here, in my opinion, are going to set the stage for whatever we're going to do on Friday after non-farm payroll. So I'll definitely be watching them. I won't be trading them. I'm just going to use them to gather information and go back to my top-down analysis so that I can get a full, clear picture on exactly how price action is being developed. Now, I know that was a mouthful, but if you guys enjoy what you see here at the Trader Shop with myself, please make sure you hit the like and subscribe button. For the Discord members, feel free to DM me or at me when you watch this if you have any questions. That being said, my name is T Hobbs. This is the Trader Shop, and I'll catch you guys on the next one, man. Peace.